Hey folks, Dan Frio here with your closing bell for January 29th, 2026. Mortgage rates were flat as a pancake, just like I thought. So what we're going to talk about today is one piece of information that kind of flew under the radar this morning, and it's apartment rents. They dropped to the lowest level in 4 years. So why are we excited about this? Well, this is great news when it comes to inflation, just because if you're watching these, you might be a homeowner thinking, can I refinance or are rates going to go down? You might be a home buyer thinking, I can maybe afford a house at these levels. You might even be a realtor or loan officer trying to explain to your clients what happened to those today and why. So let's get over to it. I don't think mortgage rates are going to move anytime soon, and let's get to the data because it doesn't look as gloom as mainstream media makes it out to appear. So right through here, we got inflation on the, let's just say the housing side. It's coming down quite a bit, and this is where I said I think inflation's going to peak, and then it's going to start to come down probably in about February. A little lag right now, but this is basically proving my point behind the scenes right through here. So that's great news when it comes to inflation front. Why do we focus on that? This is what the Federal Reserve, this is what the markets worry about when it comes to setting interest rates. So they look at the inflation numbers right through here, and they look at the jobs numbers. So we got some of this today, and we're going to get some more information kind of right behind me as well. So let's get over to the economic news that we had today, and this paints a pretty darn good picture when it comes to the economy. I'm going to give you some more information that came out today after this morning's report. So this morning we went over initial jobless claims. They came in lower than last reading, and actually continued jobless claims are lower than expected as well. So that's great news on that part of the equation. On the non-farm production, look at the production on our economy. It went from 3.3 to 4.9, and then we have a trade deficit. This thing is the lowest we've seen in a long time, and it is at minus $56 billion. To continue this, we had unit labor costs going down. This helps companies make more money. And then we had GDP coming in at from 5.4 to 4.2. Pretty hefty number, and a lot of it has to do with some of these things up through here. So not too worried about the GDP coming in. Now tomorrow, here's what I'm expecting possibly, and I don't think this is going to interrupt the markets. I'm expecting producer prices to come in a little hot. So I'm up through here. I'm kind of going to agree with this section here. They're saying producer prices month over month in December went from 0 to up 0.3, I'm going to have to give that a thumbs up. And then they're going to say the PPI is going to be 0.2 to 0.2. I'm also going to say this, don't be surprised if this comes in 1 or 2 ticks higher tomorrow as well. But I don't really think that's going to interrupt the market, and there's really nothing else tomorrow that should upset the markets. So let's get over to how robust are the companies right now? How's the economy going? Because I just went through some employment numbers with you, and those look pretty good. Now let's get over to corporate profits, and I know I'm not a stockbroker or anything, and don't trade on this. I do this to help you guys just understand the markets. Let me just show you some earnings that came out just this week, and there's a ton of earnings coming in. But you might say, Dan, inflation's high. Well, then when you start coming over here and we have Microsoft, their earnings per share is up 7.25. And then you go to Meta, and it's up 8.42. Then you go to Now, it's up 27%. Then you go to, so you can start seeing where some of these companies, their earnings per share and everything, they're doing pretty darn well. So they might not have to push over all their price increases to us, the consumer, but I'm expecting them to push over a little bit. That's what I'm expecting inflation to tick up a little bit over the next maybe 2 readings, and then from there with oil prices, as long as they don't go over $65 a barrel. We're going to get to that in a second. Well, let's get over to see what the markets are doing when it comes to the equity markets. Let's see how robust the things are going. They're not looking too good today. Well, Meta, and where there's a couple companies that earnings came out, they kind of disappointed a little bit. So a few major companies moved today. So a minus 87, if you look at your portfolio, you might not even have lost any money. But when you go over to here, here's what I'm concerned about right through here. Oil. It just keeps rolling higher and higher and higher. This is going to hurt when it comes to inflation. So I'm saying inflation is going to stay stickier if we get oil closer to $70 a barrel. Even with that housing data coming down, we might see my inflation numbers go here and not really topple, just kind of flatten out. And we need the Federal Reserve to see that it's actually toppled and starting to come down before they do anything. So let's go over and see how the bond market's reacting to this. And there's nothing today. The bond market's flat as a pancake, and that's why you're not really seeing anything going on in the interest rates. We go over to this this section here. So what's the Federal Reserve going to do when they now come in 47 days from now? Folks, they're not going to do anything. Let's scroll down just for amusement purposes. And it's probably 86% chance they're not going to do anything at the next meeting. So what should you do? Well, if you have a mortgage rate that's over 7%, you should refinance. And I might be the person to help you out. So folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. And I also have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Well, let me just explain how we do it. I'm licensed in all 50 states, folks. And the bank that I work at, they're like, okay, we want to give you as many options as we can. So we're set up with over 30 of the country's biggest lenders, banks, and credit unions. So if you want us to do the heavy lifting, to reach out there and see where's the lowest rate and lowest fees in the market, please reach out to us. We'd love to help. If you're trying to do this on your own, please, good luck with it. And we're trying to focus our time on those that really need our help. So if you need that and you're a homeowner right now, put your information right over there in RateWatch 2.1. Put in your mortgage information and what rate you'd like to refinance, or how much money a month would you like to save each month. And then what will happen is when those triggers hit, I'll call you. We'll go over through what your numbers are going to look like. If you think it's a good deal, we'll give it a thumbs up and we'll move you on. But if you're a home buyer right now or looking to build, I'd love to help you as well. So I don't really think mortgage rates are going to move all that much in the next 3, 4, 5 months. So if you're looking to buy, maybe looking to build here down the road, please reach out to us. We'd love to help get you pre-approved. Yes, pre-approved with up to 36, 37 different lenders. Just think of it. One application, one credit pool. We can do all these things for you. So visit me at the Rate Update. You can also give us a call. You can reach out to us by email, scheduling appointments, and even ask Dan a question over through there. So check out the live event I just had a little bit ago about reverse mortgages. And I bet everything you know about reverse mortgages is probably wrong. So check out that video right up through here. Or if you know somebody that needs some help with that, please have them check out that. If you're a homeowner, home buyer, maybe a realtor or loan officer trying to figure out what's going on with rates, hopefully today I made it a little bit more simpler to you to figure out what happened to those and why. So thanks for watching, folks. Have a great afternoon. Be warm out there. It is a sunny 12 degrees here in Chicago. And don't forget to subscribe over there so every time I post a video, you get an alert. And also check out those calendars or check out those calculators I have down below. We have, I think, about 7 or 8 of them. It's going to change your world if you're a loan officer. Check them out. I think you'll be a little excited. See you tomorrow morning at the opening bell to figure out what these things do tomorrow. See you then, folks. Take care and have a good night. Bye-bye.